So here's the deal with Meta. They are making an absolute mountain of cash from their apps, but they're spending every penny of it, and then some, on a massive bet on artificial intelligence. So is this a genius move to build a fortress for the future, or are they just digging the world's most expensive money pit? Let's break down what's really going on behind the numbers. Over the next few minutes, we're going to cut right through the noise of their latest earnings report. We'll show you exactly how the insane profits from Facebook and Instagram are funding one of the most ambitious and, frankly, most expensive corporate pivots in modern history. And you got to understand, this isn't just about the metaverse anymore. No, this is a full-on race to build super intelligence. All right, first things first, we have to talk about the headline numbers because they confused a ton of people. When the results first came out, the initial reaction was, well, it wasn't great. But there's a big illusion at play here. This is the number that was splashed all over the headlines. Earnings per share of just $1.05. I mean, look at that. Compared to over $6 a year ago, this looks like an absolute catastrophe, right? Well, not so fast. So what's the deal? It all comes down to a new U.S. tax law. It basically forced Meta to take this massive, nearly $16 billion accounting charge. Now, the two words you really need to remember here are one-time and non-cash. Think of it like a weird accounting quirk. It has nothing to do with how the actual business performed this quarter. But, and this is the really important part, once you pull that weird charge out of the equation, the real number, $7.25. That's a huge beat. So the big takeaway here is that the core business is absolutely not collapsing. It's thriving. Which brings us to the heart of the company, the advertising engine. This is the machine that prints all that money. Now, if you're an investor, this slide is a thing of beauty. This is exactly what you want to see. Meta is winning on two critical fronts at the same time. They showed 14% more ads to their users, and they charged advertisers 10% more for each of those ads. I mean, come on, that's the textbook recipe for explosive growth. And you want to know what's powering a lot of this? It's the AI they've already built. Their Advantage Plus ad suite, it's a beast. It uses AI to completely automate ad campaigns, and get this, it's now on a $60 billion annual revenue run rate. So while they're betting big on the AI of the future, their current AI is already a massive cash cow. And the foundation holding all of this up? It's an absolute fortress. 3.54 billion people. That's how many people use one of Meta's apps every single day. And it's still growing, up 8% from last year. It's pretty simple, right? More users means more eyeballs, which means more fuel for that booming ad engine. Okay, so we've established the family of apps is a juggernaut. It's a monster. Now let's follow the money and see the sheer scale of the bet they're making on the future. Look at this slide. Seriously, this one slide tells you everything you need to know about Meta's strategy right now. On one side, you have the family of apps, Facebook, Instagram, raking in nearly $25 billion in profit in just one quarter. And all of that profit is being shoveled over to single-handedly fund the $4.4 billion loss from Reality Labs, which is where all the AI and future tech research happens. And the amount of money they're spending is just staggering. We're not just talking about paying salaries here. This is capital expenditure, CapEx. We're talking hard assets, servers, building massive new data centers. They spent over $19 billion in Q3 alone, and they're planning to spend over $70 billion for the whole year. Just let that sink in for a second. And if you think that has to be V-peak, nope. Think again. The company's CFO, Susan Lee, basically came right out and said it on the earnings call. They expect to spend notably larger amounts next year. So this fire hose of cash isn't slowing down. They're actually turning up the pressure. So you're probably wondering, okay, they're spending all this insane money, but what are they getting for it? Are there any signs that this giant gamble is actually starting to pay off? And the answer is yes, we are seeing some really promising early signals. Reality Labs revenue, while it's still pretty small, is up 74%. Their new AI-powered Ray-Ban glasses, they sold out almost instantly. Their Meta AI assistant is already being used by over 1 billion people a month, and Threads, their competitor to X, now has over 150 million daily active users. So it's not just a money pit, there's real product traction here. All right, so where does all of this leave us? Let's look at what the company itself is telling us to expect, and, just as important, what they're telling investors to watch out for. The outlook pretty much reinforces this central theme. For the next quarter, they're expecting another huge revenue number, somewhere between $56 and $59 billion. But, and this is a big but, when they look into 2026, they are telegraphing that both operating expenses and that capital spending will grow significantly faster than they did this year. The investment phase is far, far from over. But look, this aggressive spending doesn't come without risks. Management was pretty upfront about it. They're worried about regulatory pressure in Europe, they have major lawsuits scheduled in the US related to younger users, and they even mention the potential for material loss from all these legal battles. These are some serious headwinds to keep an eye on. So it all comes down to this. Meta is using the enormous profits from its current social media dominance to build what it hopes will be the next dominant computing platform, all powered by AI. The real question for investors is whether they're building an impenetrable fortress for the future or just pouring billions and billions of dollars into a money pit with no clear return. That is the multi-billion-dollar question.